Hey guys, scalping UK shares. What are the kind of favorite UK shares that people like to scalp? Okay, so like anything we just talked about, if you're watching the previous videos, is very much depending on what's going on at the time. There was a spell when the mining companies were just beautiful trading vehicles. They were moving intraday very, very cleanly. It was like a first tier and second tier miners. It was something you could trade exclusively for almost a year. Very, very nice to trade, scalping, day trading, swing trading. There was opportunity there. So it goes in ebbs and flows. Then, of course, with the financial crisis, banks were the ones to be trading. Very, very aggressive moves, perfect for scalpers. But at the moment, if we're looking at things now, here's some UK shares that potentially are reasonably good to trade. So things like the banks like Barclays, RBS, Lloyds, they are decent shares. They're reasonably liquid, and I'm going to kind of put a caveat out there and say the UK shares are tricky to scalp because generally speaking they are expensive. Being generalizing here, but generally speaking they are expensive. If you trade them via CFD, the commissions are normally reasonably high, the spreads are normally reasonably high when wrapped up because the volume is far less than the US shares, so they can't afford to hit those tight spreads like they can with some of the higher beta US shares or the more popular US shares. That being said, it might not be something you trade all the time, all day, every day, unless you've got a specific strategy for it. But when news flow comes in for a specific sector, then things really get rolling. So some ideas are Barclays, the banks, Barclays, RBS, Lloyds. Those are kind of big ones to trade, and when they get moving, they can move quite nicely. And just for a caveat, guys, a big move in the UK might be 3%. A big move in the US is like 10%. So some of the tech stuff. So not always, but I'm generalizing, but that's generally the way it is. So whilst it's definitely feasible to trade these, direct access is probably the thing you need. Okay, number 2. Tesco, so supermarkets, Tesco, Sainsbury's, Morrison's, that kind of stuff. Those are, when there's news flow around that, those are fiery and they can get spicy, and people like to kind of trade those in a kind of trio, or Tesco's and Sainsbury's against each other. Same with the banks. We'll come to strategies in a moment. We'll touch on that when we're trying to kind of trading off, pair trading against different stocks in a similar sector. Then you've got BP and Shell. BP, even though it's a big market, it's not very volatile generally, very, very thick, a lot of orders through that. It's one of the favorites kind of pension funds and stuff in the UK and probably across the world. Obviously it's got an ADR as well in the US. It's not volatile as such, but it's there. It's something to potentially look at if there's opportunities. Definitely fills the liquidity and volume criteria. Taylor Wimpey. So these are the house builders, some other house builders to look at. Building as a sector is quite a kind of interesting one in the UK because of housing being such a topical subject most of the time. And often when we have a budget that comes out, that affects the house builders in terms of if they change the stamp duty, which is what people have to pay when they buy a house, if they change kind of the levels for it, and they change kind of buy to let stuff when people are buying them and renting them out. There's different, I know there's different nuances of different real estate markets across the world, but that from a trading perspective, from a scalping perspective, trading those can be very lucrative during those times. Like I say at the beginning of the video, on the general times, not so much, but it's worth having in the list. So you go, okay, something's going on in the UK with house building at the moment. Let's look at the house builders. Oh yeah, you might have a quarter or 6 months worth of nice scalping opportunities from them. And the miners, like I said, when they're in favour, beautiful things to trade. Anglo American is just an example of that. And the FTSE 250 sweet spot. So what I mean by this is there's a few shares in the FTSE 250 that are as volatile as some of the NASDAQ shares and have a reasonable spread as well. Now, sometimes when you go into the dregs of the 250, the spreads are too wide. The spreads are too wide, very difficult to trade. They narrow, they widen, liquidity goes dry. You don't have the volume. So you've got to find the sweet spot of, like I say, we know already, volatility, liquidity and volume. And so there's some that are sort of in the 250, they're very much in favor, they're very much kind of a modern stock, if you like, if I can call them that. But let's say there's something that's, got a business that's expanding rapidly, like some of the US stocks that we'll look at in a second. They're expanding rapidly, lots of money flowing into it, and they have a kind of a bad earnings and it dives down like 50% over a few weeks and it's back up. Those are the things that offer opportunity as scalpers as long as there is liquidity in the volume there. So think like the fast fashion stocks, maybe like Boohoo. Think things like JD Sports, It's kind of on the cusp of the 100, it may be by the time you watch this. All these kind of things that are there in the 250 that, you know, pretty decent, and they have volume when there's news flow in it, but normal intraday trade, probably not. But it's kind of this thing that you can scalp if you've got a kind of good feel on it, a good handle on it, and you kind of got a good know of what's happening on and what's making it move. Next one, guys, look at US shares, or US stock, should I say, which in my opinion are a much better scalping vehicle.